Are tariffs shaking the very foundation of our markets?
Today we have Jason Shapiro on the Crowded Market Report revealing how these tariffs could affect trading strategies.
And the best part? We distilled hours of insights into quick, actionable strategies for you.
Exactly. Discover the potential volatility in sectors affected by tariffs and expert predictions on navigating through this chaos.
Welcome to Financial Insights in Minutes, where you get time-saving insights from the top financial minds.
Stay tuned as we preview conversations with Keyu Jin on China's response to tariffs ahead.
But first, let's dive into Jason Shapiro's take on how Trump's tariffs bring intraday volatility. Market jitters are on full display as Trump's tariff plans shake things up.
Exactly. The intraday panic showed just how sensitive markets are to political moves.
But are these tariffs really going to change anything significant?
That's a great question. Let's dive in and analyze the implications.
Shapiro emphasizes that bull markets tend to overcome these types of news.
It's all about the ability to shake off bad news.
But isn't it true that tariffs can have long-term economic effects?
They certainly can, but in a strong bull market, this impact often gets diluted.
The S&P took an immediate hit, but swiftly bounced back.
That seems to contradict the influence of such significant news.
Exactly. This indicates underlying strength in the market.
Such resilience raises the question of investor sentiment.
The Canadian dollar suffered greatly due to Trump's announcement.
Right, but it did claw back some losses by the day's end.
Interesting. Does that mean the panic wasn't justified?
Possibly. Traders often overreact to news, creating buying opportunities.
Let's talk about natural gas and its market positioning.
Yes, Shapiro points out the current market dynamics favoring shorts.
So, if there's a breakout, this could lead to significant moves.
Exactly. People will be forced to cover their shorts, which could drive prices higher.
What does Shapiro predict about market volatility?
He foresees ongoing fluctuations due to political maneuvers.
So, should investors brace themselves for more turbulence?
Absolutely. Maintaining flexibility in strategies is key. In conclusion, it's about balancing responsiveness with strategy.
Flexibility is vital in today's unpredictable market.
And don't forget, opportunities can arise from volatility.
Smart investors use these moments to their advantage. Up next, Keyu Jin discusses how China is planning to retaliate against Trump's tariffs.
This conversation promises to reveal critical insights on an evolving situation.
Definitely a must-watch for anyone interested in global economics.
The future of U.S.-China trade under a Trump presidency is a hot topic right now. What does Keyu Jin have to say?
She offers a fresh outlook on how China plans to tackle potential tariffs head-on.
But can China really withstand further tariffs? Isn't that a stretch?
Keyu suggests that not only can they handle it, but they've been preparing for such scenarios.
Jin argues that China's responses this time will be more seasoned and strategic.
Exactly. They're no longer caught off guard as they were before.
What partnerships do you think we'll see emerging?
She points to strengthening ties with Europe and developing economies.
Jin suggests that even a hefty 60% tariff isn't the end.
A 60% tariff? That's huge. How does China get around that?
They've diversified their trading partnerships significantly.
Does this mean they're moving away from the U.S. entirely?
Not entirely, but they are expanding their focus. Jin notes a growing bond with Europe over shared economic goals.
What about the tech transfer dilemma?
It sounds complicated, with past accusations on both sides.
Absolutely, but there may be pathways to mutual benefit.
With a Trump presidency, could we see better negotiations?
Jin believes the transactional approach could open new avenues.
But what about the underlying tensions?
There will still be challenges, but room for dialogue exists.
What's in store for China's international relationships?
Jin predicts a stronger pivot towards emerging economies.
Could this be a long-term strategy?
Absolutely. This will shape their future trade landscape. The takeaway is clear. China is geared up for future economic shifts.
And they're not just sitting back, they're taking action.
Sounds like a game of chess in the global arena.
Exactly. Next, we'll delve deeper into China's economic forecast for 2024.
Get ready for a comprehensive look at what's ahead.
And how the new generation could reshape everything.
The copper-to-gold ratio has hit alarmingly low levels, echoing the financial turmoil of late 2008. What does this mean for today's economy?
It serves as a cautionary tale, suggesting economic fragility beneath the surface, which shouldn't be ignored.
But isn't it just a lagging indicator? How much weight should we give to historical comparisons?
Great point. While historical context is important, it's the trend that's concerning. Let's dissect this further.
The crux is how copper reflects industrial demand while gold is often sought as a safe haven.
Exactly. And when the copper-to-gold ratio declines, market sentiment shifts towards pessimism.
But can this really predict economic trouble ahead? What's the evidence?
It's not so much predictive, but rather indicative of how investors feel about future economic conditions. A lower ratio can mean rising uncertainty in the markets.
Looking back, the ratio's recent drop mirrors critical lows from the 2008 crisis. What could this tell us?
It suggests a lack of confidence in economic recovery. Is that a fair conclusion?
Absolutely. Every time this ratio dips sharply, it reflects fear overshadowing industrial growth. The U.S. labor market is weaker than mainstream narratives suggest, which adds to the overall concern.
Exactly. And if Europe and China don't stabilize, the ripple effects could be devastating.
So it sounds like we're not just watching one country, but a global phenomenon.
Indeed. The interconnectedness of our economies means we all feel the shocks of instability.
What does the future hold if this ratio doesn't rebound?
We're likely staring down prolonged economic weakness, possibly a recession, in the near term.
And how will central banks react?
They might have to adjust monetary policies drastically if these trends continue.
So the key takeaway here is to keep an eye on these economic indicators.
Yes, understanding these signals allows for better investment strategies moving forward.
And a proactive approach can help mitigate risks.
Absolutely. Knowledge is power in uncertain times. Next, we'll hear from George Gammon about recession signals that many are overlooking.
You won't want to miss these insights on the hidden indicators of economic distress.
It's a must-watch for anyone interested in financial survival strategies.
What's the word, folks? George Gammon is here to shed light on the recession signal that many seem to overlook.
Absolutely. Gammon dives deep into current economic indicators that warn of a recession, especially with the Fed's recent moves.
But is it all doom and gloom? How can we really prepare for what's coming?
Let's jump into it and unravel Gammon's insights.
Gammon argues that the relationship between the Fed's rate cuts and inflation is critical.
And it repeats itself throughout history. 2007 is a prime example.
So he believes we may be in a similar scenario now.
Indeed, just as in previous cycles, when cuts lead to unforeseen inflation spikes.
He draws parallels between today's cuts and those from 2007 and 2008.
Exactly. In 2007, the CPI was at 3.5% before rates were slashed drastically.
What does that tell us about current inflation?
It signals possible risks of re-accelerating consumer prices. Gammon insists that the perception of a debt crisis is exaggerated.
Interesting twist there. His view counters the common narrative.
So does he think the economy can withstand this debt?
He argues it's not the debt, but government spending driving economic distortions.
What investment strategies does Gammon recommend in this climate?
He advises prioritizing risk management and considering undervalued commodities.
And gold, is that still a viable option?
Yes, especially if recessionary conditions are on the horizon.
So, how does Gammon see the market reacting in 2025?
He believes there's a strong chance of broader disinflation, contrary to popular opinion.
What factors underpin that prediction?
Historical patterns that usually lead to disinflation post-recession. To sum up, understanding these economic cycles is key.
Absolutely. Careful risk management can protect against downturns.
And it seems commodities may offer the most stability moving forward.
Today, we dive into the economic forecast with Dr. Arthur Laffer, who feels euphoric about what's ahead, reminiscent of the Reagan years.
That's right. Laffer was key during the Reagan administration and has insights that could guide us through what's coming.
But can we really expect such a dramatic shift back to economic prosperity?
Let's hear Laffer's thoughts on the incoming administration and potential impacts.
Laffer's main argument is that Trump's approach will foster an environment for explosive growth.
Exactly. He believes Trump is poised to greatly reduce tax burdens, which has always stimulated the economy.
But what about the potential fallout from these changes?
Laffer suggests the immediate transition will benefit the broader economy, outweighing any temporary discomfort.
Laffer highlights the critical need for a shift to lower taxes.
What changes are we likely to see regarding business taxes, though?
Expect cuts that could spark significant growth, especially in small businesses.
Could this lead to job creation as well?
Absolutely. It's all about incentivizing employers to hire more workers. Dr. Laffer emphasizes the importance of controlling government expenditure.
What's the expected outcome of cutting back on spending?
Hopefully, a healthier economy. Less waste means more available for productive use.
And it allows for better tax management and economic growth.
Can we expect less regulatory pressure on small businesses?
That could really help startups flourish.
Indeed, Laffer advocates for a freer market to stimulate economic activity. Laffer predicts a significant economic boom reminiscent of the 1980s.
And that growth could last nearly a decade.
What about potential risks during this growth phase?
The key is managing inflation and maintaining a stable environment. The overall conclusion is an optimistic outlook. Economic policies can drive exceptional growth.
Laffer reminds us that timing is critical. Adopting reforms quickly is essential.
It's about creating an environment where everyone can thrive.
Informed decisions, swift action will pave the way to prosperity. What do you think about Laffer's predictions?
Let's keep the discussion going in the comments below.
Your insights on the economic outlook are valuable.
What a comprehensive breakdown of the current financial landscape. Each expert brought unique insights to the table.
Absolutely. Jason Shapiro highlighted how Trump's tariffs trigger market volatility across various sectors, especially in commodities and currencies.
And Keyu Jin's perspective on China's strategic diversifications amidst tariffs adds another layer to our understanding of the global market.
Yes, not to forget Tom's analysis on MicroStrategy's stock and Bitcoin's influence. It seems the interconnectedness of markets is a key theme.
George Gammon's warnings about potential recession risks certainly don't escape our attention either.
Indeed. But there appears to be some disagreement on how to navigate these challenges, a perfect example of the diversity of opinions in the financial community.
Exactly. For everyone watching, remember the importance of staying informed and adapting your strategies based on these shifting dynamics.
If you found this episode useful, be sure to like and subscribe for more insightful discussions like these. We promise to keep you ahead of the curve.
Thank you for joining us. Don't miss our future episodes where we'll delve into more pressing financial topics.
And make sure to check out our previous videos for more expert analyses.